So today the curtains have come down on perhaps what is Kenya's biggest conference so far in 2018. And yes, I'm talking about the blue economy. And over the past 3 days, Kenyans have gotten to learn on just what our marine resources hold for economic development. And I'm sure that you've gotten to learn that the blue economy is not just about fishing. And to further this discussion, I'm joined by the president of the Chartered Financial Services Society of East Africa, Miss Patricia Kiwanuka. Miss Patricia Kiwanuka.
Thank you very much. It's a pleasure, Kefa.
So we've touched on the blue economy, yes. And we've gotten as far as we've seen the impact, we've seen what the marine resources hold, yes, for the country and inspiring economic development. Mm-hmm. Now, an important part, which is where you come in as an expert, is the financing part. Yes. And looking at financing, President Uhuru Kenyatta is looking for around 143 billion Kenyan shillings to further that. And knowing that the government, with the austerity measures, doesn't have that cash, most of this money is expected to come from the private sector. Absolutely. And now to the private sector. How can the government, rally the private sector in these blue economy investments?
I think a good place to start is you just think about private sector, even just retirement benefit schemes. We're sitting on over 1 trillion shillings. So even if you just did an allocation of, say, 5%, you could start closing that gap. I think it's also important to put in context that it's unlikely that that amount of money would be spent in one go. So I would expect it to be a project that is phased out over time once they develop the policy. So it will be interesting to see once the task force or whoever is creating the policy has created this, to know, will we start by building out the fishery platform to better? Or will we go to aquaculture? I mean, what is our plan long term, and how does it phase in to take advantage of opportunity? As an investor, your biggest challenge is return. So you're always looking to match your return, your time frame, and your risk. If they structure it correctly, there's no reason that money should not come from local market.
Moving to the next question, with the big investments, especially when you're bringing in foreign entities, we almost tend to leave out our local communities, and knowing that we have a lot of communities along the coastline that are engaged in fishing and in other activities, maybe collecting curios and so on. How do we ensure that any investments made will go into ensuring that there's that it encompasses everyone in the development?
I think a key tenet of that blue economy is about getting your community involvement. If you don't do that, then it's not sustainable for the long term. I think we've burnt our fingers so many times, not just in the coast area, but even when we started doing the Lake Turkana or the Lapset project, when we started doing SGR, we did not talk to the local community, and we've ended up doing compensations that are quite high. I think it's time to say that I hope the government has learned, and that these lessons from earlier projects will be carried forward into whatever is being done. And I think this conference for me is actually a very good start, because surely I don't remember having a conference of this size before LAPSET or before SGR, and yet these projects are quite big. So I think for me there's commitment to having dialogue, and this definitely looks like stakeholder engagement is happening. I don't think you can have one size fits all for all communities, but I guess starting point is the coast people knew this conference is happening. They need to talk about this. Their governor needs to spearhead this. The Lake Basin Authority, they need to spearhead this so that they're not left out as decisions are being made.
And what has emerged from financing again, Treasury has been suggesting listing a green bond at the Treasury. And just are we ripe? Is the Kenyan economy ripe for such a product?
I think the question would be who they're targeting. A green bond backed by the government is just like any other bond. It has the whole balance sheet of the government. It's secured. If the interest is attractive, then I'm sure even just the local fund managers will participate. If you look at foreign investors, again, it will just be about how transparent they are about what they're going to do with the money. If once you call it a green bond, you better direct it to the right projects. You can't divert it into salaries and all other type of expenditure. So I would say the appetite for a bond especially is attractive. If they can structure it and give us good interest, I would say then that would make a very good investment. I would pray that they actually do it locally and not list it internationally like they did with the Eurobond. But I guess that's a question for Treasury to make the best bang.
And speaking about listing, there's always that talk of, are we bringing more of the local investors? we bring more of the international investors. What would you say is the right balance then?
Well, certainly if you look at just the local bonds, when they're listed here, they get more local play because they're in Kenya shillings. So the fund managers are attracted to them, we're attracted to the interest. When you look at the infrastructure bond, for example, we didn't participate as aggressively in it. When you look at the euro bond, then you now start to struggle because that was listed outside, which means we need to factor in foreign currency. So I think it's a good test for the government in terms of supply and demand to figure out whether they want, in lack of a better word, money that is more return chasing or money that is more stable to be invested within the green bond.
Speaking of return on investment, we know investors like yourself, investors like myself, the return on investment is always key.
Absolutely.
Yeah, and looking at the whole stock exchange, how it's been trading this year, we've seen that investors are shying away from taking part in corporate bonds. We have the real estate traded funds. They're shying away and they're going for the usual, the 91-day notes, the 365-day note, given the returns of it. How do we change the narrative so that when you're bringing, like sustainable products, like the green bond, in the stock exchange market, that we ensure that that's taken up?
I think it's always a risk-return balance. And you're right, the stock market has been extremely appalling this year. And yet it's not for lack of new products. If you look at both the Nairobi Stock Exchange, Securities Exchange and the capital markets have gone out of their way to introduce new products that are very exciting when you think about them theoretically. However, the uptake has been very low. So you're correct in that. I think there's always the argument whether the government should be borrowing less from the market. And in that way, the risk-free investment alternative shifts for us to start looking for better return elsewhere. The argument could be played the other way, which is perhaps we need to be able to take more risk and have trustees and institutions willing to take more long-term exposure or more long-term risk, because these investments do make return. When you look at a counter like Centum, which is a private equity counter, it does make money. Not on the stock market, but when you look at what they're doing and what transactions they carry out, they make profit. So why are the rest of the institutions shying away from this and having such a short-term play? I think there's a room for us to start educating our institutional investors that you need to invest long-term. If you're a pension fund, if you're an insurance company, your horizon is so much longer than a 91-day treasury bill. And it's time for them to start taking that additional risk.
And speaking of the same jitters you expressed with pension funds, we've seen these traditional investors who believe it's treasury bond or the highway. What should the institutional education entail then? Because we still see a lot of reluctance amongst especially traditional investors in taking up these new products that are coming up.
I think as risk-based frameworks are being adopted, both within the central bank, within the insurance companies, if that rolls forward into pension funds, then this conversation of matching liabilities and assets will become increasingly visible. Because right now, all we're doing is a return play. There's very little reference to what the underlying liability is. I think as we start doing that and we shift this conversation more around the risk and the time frame and the liabilities that the institutions are holding, I expect that to change. The players that really should be within treasury bonds that aggressively should ideally be banks, which is retail money. And then they should be looking to lend to me, not to the government. So again, I'm hoping also as the government tries to push down interest rates that we will change our focus to start looking for return in other areas.
Taking you back to the blue economy, we saw we partnered a lot of countries, Canada being one of them. The Scandinavian countries, again, some of the countries are so interested in sustainable development. But looking at it locally, is there enough education, is there enough data, is there enough supporting evidence to show that sustainable development is the way to go, even as we think of listing all these new products?
I think, okay, if I focus mainly on the blue economy, then certainly data is not very available. I think they've now started doing measures to try and quantify it in a way that an investment person can understand. You know, this all started from an environmental background. So there's going to be some challenges in communicating to me the value of coral, or what you can mine from coral, and how you can communicate that in investment terms. So that gap has to start being bridged between the environmentalists and the investment professionals. When you look at just green or sustainable investing, I think there is evidence that it works, and those who are long-term players take advantage of it. But for the local mwananchi, I don't think we're aware of it, and therefore such opportunities just pass us by.
As we wind up, we've created excitement with a whole 3-day conference that's been talked about the world over. I think even locally, a lot of people have been asking, I've heard of the Blue Economy Conference, what is it? So the excitement is there, but keeping going. What next? What's the next chapter?
I think the next chapter is to sit down and do the hard work. I don't think excitement is going to run this any further than it has. It's good that we're now aware, but as you rightly say, we are Kenyans, we forget quickly. I think now it's for the government to say, look, we made a global commitment on a global platform to do certain things. And it's that demonstrating that track record. I think for me, the excitement from this conference was just hearing that some of the things that have been happening in the background that we probably didn't hear about. I mean, when you see a big picture of a big ship called Coast Guard, I mean, the last time I heard of Coast Guard was in America. So there's some excitement to that. But you see what we'll forget. And that's what for me is important, is let's now go out from the PR or the media side, and let's now do the hard work and come out and say, okay, these are the 4 big things, the same way we've done with the big 4. Tell us what the big things you want to do and what timelines, so that we can keep you accountable onto how you're delivering on those promises.
That marks a very good ending point to this interview. So that has been Ms. Patricia Kiwanuka with the CFA, and we are thankful to have you here.
Thank you.
To explain more on the blue economy.
Thank you
so
very
much.